Gold drops $24, and it's really quite disappointing. Nvidia earnings come out. If they come out extremely strong, stocks will go up, silver will go up, gold will go up, because the market will say, well, the Fed's still going to ease.
Gold dropped by $24, and it's quite disappointing. Nvidia's earnings are set to be released. If they come out extremely strong, stocks, silver, and gold are likely to rise because the market will anticipate that the Fed might still tighten its policies. Recent news shows as the dollar strengthens, often driven by expectations of continued economic strength in the U.S., gold typically faces downward pressure. Vince Lanci, a seasoned trader and market commentator, known for his expertise in commodities, especially precious metals, explains the correlation between gold and the dollar is returning, bringing with it susceptibility to downside volatility. As banks begin recommending gold to Western investors, they're using potential Fed rate cuts as a reason to buy or sell. This has reminded investors of the dollar-gold correlation, which has been largely overlooked since the start of the Ukraine-Russia conflict. As opinions on Fed rate cuts shift, so will gold and silver prices, assuming Asia remains inactive. If stocks drop due to earnings like Nvidia's, the dollar might rise, leading to a sell-off in gold as investors cover their margin calls. If Nvidia's earnings are weak, stocks and gold may decline. Conversely, if stocks rally, gold and silver might follow. The key question is whether the market still expects a Fed rate cut in September. Dollar strength causing gold weakness is not a reason to sell gold in the context of the upcoming BRICS summit and the U.S. election, but others may see it differently. The short-term Western mindset may trigger selling if the dollar rises. In the short term, gold might be showing signs of being technically toppy as the market becomes crowded with long positions. A report from the Market Ear highlighted this with several charts, suggesting that while gold has been breaking out, it hasn't sustained momentum. Although the long-term trend remains intact, the inability of gold to trade above the upper short-term trend line indicates fading momentum. Gold bulls need to see the metal move well above this trend line to regain strength. As we present clips from the video, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell to be instantly notified every time we upload a video. Thanks for the support and enjoy the video.
Gold-dollar correlations are returning, and with them, susceptibility to downside volatility. As the banks start to recommend gold to Western investors, you've seen that here over the last weeks. They are using the coming Fed rate cuts as reason to buy or sell gold. That has reminded them, whether they like it or not, that has reminded their clients of correlations. We all know that the dollar and gold correlation is something that's been largely ignored for the last, over 2 years now, starting basically with the Ukraine-Russia war. But they're back. And they come back when you start looking at gold from a Western perspective. All right. If the West is looking at it, it follows from this that as Fed rate cut opinions rise and fall, so will gold and silver again, assuming Asia is doing nothing at the moment. Therefore, here's a knock-on effect. If stocks sell off because of earnings, I bring that up today because Nvidia's earnings are out today. If stocks sell off because of earnings, you could see the dollar rise on the back of that. And you could see gold also take it on the chin as Westerners use these data points to get out of dollar-denominated assets. They will sell their gold once again to cover their margin calls in Nvidia. But these are short-term behaviors now. These are not long-term structural problems anymore. So be aware of it. Nvidia earnings are out today. If they're weak, stocks will broadly drop and gold will be taken with it. The question is, will the market remember it thinks the Fed is cutting in September or not? Meaning, if stocks rally, gold and silver will rally back with them. If stocks don't rally, then the market is telling you that it's fearful the Fed may not cut enough. We think dollar strength that causes gold weakness is not a reason going into BRICS and the U.S. election to sell gold, but others will think that. So why say all this? Because the short-term Western mindset is getting triggered to sell if the dollar rallies and buy if the dollar drops. Focusing on that short term for the technicians in the crowd, gold may be toppy. Technically speaking, the market may actually be short-term toppy as the longs get a little too crowded. Now, the market here has a comment out on this morning. They have about 7 or 8 charts to that effect. They're not telling you that gold is toppy. They're telling you watch it, it may be toppy. So here's a quote from that report. The breakout move higher refuses igniting properly. I think what they're saying is it hasn't ignited properly. It's been breaking out, but it's been fading. The longer-term trend is intact, but the fact gold isn't able to trade above the upper short-term trend is a sign of fading momentum. Let's see how this plays out, but gold bulls need the shiny metal to trade well above the upper trend line. Now, they're right.
The recent analysis suggests that gold may face resistance as it approaches a key level, with multiple wicks touching but not breaking above it. If gold fails to move past this level, other indicators might turn negative, especially if the dollar strengthens. However, if gold does break above, a short-term rally could reignite. Bank of America noted that gold is now the second largest reserve asset with low correlations to stocks, but this crowded trade could be risky. Contrarians might argue that too much money in gold could lead to a sell-off, especially since there's no major economic crisis like soaring oil prices to justify extreme fear. According to a news, if inflation is rising, Bank of America might predict higher gold prices as investors seek a hedge against inflation. The suggestion is that crowded positions in gold often lead to selling, but this primarily refers to Western markets, not Eastern ones. Lastly, Fed President Raphael Bostic's comments are seen as mere market appeasement, not worth focusing on. If Nvidia's earnings are weak, it could cause everything to drop, and the market might speculate on a larger Fed rate cut, like 50 basis points. Although it's uncertain, gold could be unfairly affected by Nvidia's performance today. Whether you choose to buy or sell during this period depends on your strategy. However, in the bigger picture, considering factors like the election, BRICS, and the overall demand for gold, these short-term fluctuations may not matter much. Let's get back to the interview.
You'll see there's like 4 or 5 wicks, touching the area before we get above it. But if you use those wicks as a line, you end up getting something that looks like this. Okay, so you could argue, as the marketeer is, if we don't get above that, you could start to see other indicators roll over and the market will take it on the chin, especially if the dollar is stronger. If gold breaks above this line, you could see this short-term reignition happen that we're looking for, which would be bolstered by the fundamental or longer-term chart that Michael shows us. Next quote by them is actually them taking a bullish statement and flipping it on its head, but that's how you look at things if you're truly a risk manager. Last week, Bank of America wrote gold is now the second largest reserve asset and has one of the lowest correlations to stocks across asset classes. We showed that in our HeartNet breakdown. You can look at the same data and say, you know what? Too much money is in gold. It's a crowded trade. Be careful, right? If you're a contrarian, you're looking at this saying, well, how long can this go on? There really should not be a lot of FOMO in an asset like gold unless the end of the world is coming. Now, okay, maybe the end of the world is coming, but I don't see oil breaking $150 yet. Okay, so the case can be made that the market is toppy. If you want to get an idea of that, look at this, what happened to gold after that. Look at this, what happened to gold after that. So you could arguably say that crowding brings selling, crowding brings selling, crowding brings selling. So you could arguably say that crowding may bring selling. All right, but that's Western selling, not Eastern selling. Okay, we have more. Where is that? Pardon me. I am just really bad with this today. All right. We have some more analysis on that at the bottom. Here's the data today. The data today is the Fed President Raphael Bostic. Ignore him. He's just blabbering whatever needs to be said to appease the markets and probably to talk them down. If Nvidia's earnings are weak, everything will drop. And then the question is, will the markets say, oh, the Fed might cut 50 basis points now? I don't know. I don't pretend to know, but I will say that gold will be unfairly dragged around by Nvidia today. You decide if you want to buy the dip or if you want to sell the dip or if you want to buy the rally or sell the rally. But just know that if you're looking at the prize, and that is how the market treats the election, how the market treats the BRICS, and how the market treats Or the fact that everyone wants to gold now, right? Then these little wiggles and waggles don't matter.
While short-term factors like Nvidia's earnings and Fed rate speculation may cause fluctuations in gold prices, the broader context of upcoming events like the BRICS summit and the U.S. election may have a more lasting impact. Investors should consider both the immediate market reactions and the longer-term trends when making decisions. How might the potential Fed rate cuts influence gold prices in the short term versus the long term? Share your thoughts on Vince's suggestions in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.